Hello there. Welcome back to Financial Accounting in 5. In this video, we want to look at the preparation of the balance sheet. So we've got a question that we have here from the past exam paper. This is question 4 on that question paper. In particular 4.1, and it reads: the owner of Cox Traders informs you that no proper accounting records were maintained for the two financial years ended 20 February 2014 and 2015. He can, however, provide the following financial data. So we've got the financial data that we are given. Well, we've got a column for 2014 and we've got a column for 2015. So if you go beneath that now, we don't have any additional information. We go straight away to the question. So the part that we want to look at is 4.11, which is the owner requests you to draw up a financial statement. So the financial statement that is being referred to is the balance sheet. Remember, we have got three main financial statements that we have in the books of accounts in businesses. We've got the income statement, which is the statement of comprehensive income, or we might call it the statement of profit or loss. And then also we have got the balance sheet, which is also the statement of financial position. And finally, we have got the statement of cash flow, or the cash flow statement. So those three. So according to this video, the financial statement that is being asked there is the balance sheet. And it reads: the owner requests you to draw up a financial statement to calculate his net profit for the year ended 20th February 2015, bearing in mind that he had withdrawn 4,200 during the year. So we are seeing that we have got drawings that are there, 4,200, and also the net profit figure was calculated in part 4.1.2, where a statement of change in equity was prepared in the last video, and we found out that the figure for net profit and the figure for closing capital that is supposed to be in the balance sheet. It was also calculated in the last video. So we are just going to reiterate what transpired in the last video in terms of how did we arrive at the closing capital that we have to include in the balance sheet. So having said that, now we can go to our answer section and see what we have on our answer section. So this is our answer section whereby we are having the balance sheet of Corex wholesalers on 20th February 2015. So 2015 is the year that is in question. So we are going to present it by starting where our balance sheet starts, where we have got our assets. So here at the beginning, it means we have got our assets, and then we have got our non-current assets. We're going to start with our non-current assets. Remember, non-current assets are also called fixed assets. So this is what we have, and then we check now in the list of balances that we are given for 2015. Remember, we're dealing with the current year, which is 2015, and check the non-current assets that we have. So the first one that we have there is equipment, which is here. Equipment at cost, and there's a cost price of 29,400 here. But also there is accumulated depreciation that is there of 11,345. So remember, the balance that we calculate, or that we include in the calculations of balance sheet, is the carrying value. And for us to find the carrying value, we say costs minus accumulated depreciation, of which we're given a cost here. It costs 29,400. Then accumulated depreciation on equipment, now we're given 11,345. So basically, we are saying 29,400 is our cost, and then we calculate, then we subtract our accumulated depreciation, which is 11,345. So we do that. We see that we are going to get your let's try to see 18,055. We can just try to verify the calculation. We have 29,000. We have 29,400, and then we subtract 11,345, and we are going to get 18,055. So this is the answer that we have here. So we can now go there and just summarize that calculation. Is our equipment. So we can just try to remove this. So we are saying equipment. So in brackets, we show the working by saying at 29,400. Then we subtract 11,345. And then we calculated it, and we got our 18,055. So here we have got 18,055. And then obviously, if you go to our question, I will check other non-current assets that we have. And if you go down, you'll see that we've got our investments here, where we have got 4,000. And remember, we have investment, we included under other financial assets. So this is the only financial asset that we have there. So we can just say here, other financial assets just beneath our equipment. Other financial assets. And the figure that we are given there is 4,000. So here we are saying 4,000. So that marks the end of our non-current assets. So we can just get the total for non-current assets. That should come in line with the description for a non-current asset. So we calculate it. 80,055 plus 4,000, we get to 22,055. So this is what we have in terms of non-current assets. Then we go to current assets. For current assets, we are going there again to try to pick the current assets that we are given in the question. So we start from the beginning, going down. We've got the bank, which is 4,572, which is a favorable balance. We know that when it's a favorable balance, it's an asset, but when it's unfavorable, we're supposed to include it under our liabilities, under current liabilities. But in this case, we have got favorable. So remember, bank is under the cash and cash equivalence description. So we're going to look for bank and then look for other cash balance that are given in the question that can add to bank so that we can get the total for cash and cash equivalent. So we go down. I would see that we also have cash float here, which is 1,500. So we're going to say 4,572 plus 1,500, then we get the total for cash and cash equivalent. So we come here. We now say cash and cash equivalents. Then in brackets, obviously, we have to show the working. Here by saying 4,572 plus 1,500. We add the two, the total that we are supposed to get is 6,072. We go back again. We try to check other current assets that we are having in the question. Remember, the other description that we have under current assets is trade and other receivables. It is going to include our debtors control or debtors if we have them. So we see that we've got debtors here, so they're going to be under trade and other receivables. Then we can check for other receivables, which prepaid expense is also a receivable. And take note that when it's an accrued income, it's also a receivable, but we don't have accrued income in our question. So you only have prepaid expense and debtors. So it means we have those two. So prepaid expense 2,986, we add to the figure for debtors, which is 17,040. We go there and summarize it as trade and other receivables. So we are here, we are saying trade and other receivables. So what are we saying? For trade and other receivables, we are saying trade and other receivables, we are given, we can put it as 17,040. Then we add 2,996. And then we see that the total that we are going to get there is going to be 20,036. So we have 20,036. So this is the total that we have. So we see that we have exhausted our, we still have stock, sorry, we still have stock, so we can just go there and try to see. For stock, we have it here, trading stock, and we have 64,080. So we are going to include it as inventory. So you see that trading stock is part of inventory. We might have in some questions, we might have some consumable stores as part of the inventory that we are supposed to put in the balance sheet. So you will be supposed to add the consumable stores to the trading stock. You might also have stationery being a closing stock also. You add it there so that you get the total for inventory. So in this case, we don't only have trading stock. So this is our inventory. So we go there. We put our 64,080 is our stock. We just say inventory, which is 64,080. So this is last the last current asset that we have. Then we can add. If you add, we get the total for current assets. So this description of current assets should be reflected by this figure. So it says 6,072 plus 10,036 plus 64,080. And we'll see that the total that you are going to get there is going to be 90,188. So what we are going to do is remember we are going to add our non-current assets plus our current assets. So let's just try to see. So again, non-current assets, we will put 22,055, then we add 90,188 to get our total assets. So basically we are saying this figure plus this figure. And we see the total that we are going to get there. The total that we are going to get there is going to be 112,243. And this is going to be your total assets. So remember, in the balance sheet, we follow the accounting equation whereby we say assets is equals to capital plus liabilities. So the total for assets, that figure that we've got there, should be the same with when we go down, we are going to add our capital plus our liabilities. And when we add them, the total should be equal to the total that we've got for assets. So that's how the balance sheet should balance. So basically, we come here. So it means our total assets that we have there is going to represent our first balancing figure. Then we can just close it. And then we go to the second part of the balance sheet. Now we are looking at equity and liabilities. Equity is just the representation of our capital. Then in the liabilities, we're going to add the two. Then we get the second balancing figure, equity and liabilities. Right. For equity and liabilities, I'm going to start with the capital. Capital figure is the figure that we said we calculated it in the last. It's there in the. We're given it in the list of balances that we are given there. Right. So for our closing capital now, we are saying it's supposed to be in this column, but we are not given it as an alternate figure there. We need to calculate it. So to calculate it, we calculated it in the last video. But what we did was we just used the accounting equation whereby we say assets is equals to capital plus liabilities, like what we said. So we want the figure for capital. We make it subject to the formula. It becomes capital is equals to assets minus liabilities. So what are we going to do? We are just going to add the total for assets and then we subtract the total for liabilities in the column of 2015. So we come here. We are saying our assets. Let's identify our assets and liabilities. This one is a liability. A bank favorable is an asset. Equipment is an asset. So for equipment, we are going to say, remember, we say carrying value is the figure that is supposed to be shown in the balance sheet. So for equipment, we're going to say the cost minus accumulated depreciation. Then the figure for carrying value, that's the one that you are supposed to add in the calculation of the total asset. Then you go to prepaid expense, it's an asset. Accrued is a liability. Investment is an asset. Debtors an asset. Creditors liability. Trading stock asset. Cash flow asset. So we're going to add all the assets that we have. So if you say 4,572 is an asset, we add 29,400, we add 2,996, we add 4,000, we add 17,040, we add 64,080, we add 1,500. You're going to get a total of 112,243. 112,243. So this is the total for your assets. And so this is a representation of your assets. And then we subtract the total for liabilities. We come in. Liabilities, we've got this one, which is our loan, 8,000. And then we add our accrued expense, 1,126. And then we add our creditor, 7,608. And then we get the total for liabilities, which is going to be 16,806. So we subtract it here, 16,806. And then we do that. The final answer that we are supposed to do, after saying 112,243 minus 16,806, you're going to get your 95,437. So this is your closing capital figure that is supposed to be in the that you are supposed to find in your balance sheet. So here we are saying capital. So the figure that we got there is 95,300. of 437. So this is what we have. So beneath our capital, that's where we're going to have our non-current liabilities. Non-current liabilities. Then for non-current liabilities, remember we have our loan that we have there, which is loan 8,000. That's a non-current liability. So we come here. And well, we have got 8,000. So we're just going to say loan in wave of 8,000. And that's the only non-current liability that we have. So we're going to put it as a total here. If you have got another non-current liabilities in the question, you just list it here, then the total should come in line with a description of non-current liabilities. So having done that, we now go to current liabilities. So for current liabilities, remember the first description that we are going to have is trade and other payables. Trade and other payables, whereby we are going to include our creditors figure, and then we add other payables that we are in the question. Other payables, we can have accrued expenses or owing of expenses. It's a payable, and also we can have a prepayment or in advance of income. It's also a payable. So we check for those. If you go down, you see that we've got creditors. That is there here, creditors with a figure of 7,680. And then we also have accrued expense here, 1,126. So those are the two that we have. So we added the two by saying 1,126 plus 7,680 here. Then we get the total for our trade and other payables. So here we are saying 7,680. And then we add 1,126. And then the total that we are supposed to get is 8,806. So this is what we have. So from there, we can now add the second part of the so that we can get the second balancing figure by saying our capital plus our liabilities. So let's just check those figures. So remember, for our capital, we have this figure. This is our capital. We add the non-current liabilities figure 8,000. We go down. We are left with the current liabilities figure, which is our 8,806. This one. So remember, after putting your 8,806, it's supposed also to come with the description of our current liabilities. Remember, we might have many current liabilities beneath here that we may list. After listing them, we add the total should come here. So in this case, we've got only one. So it's going to come here as 8,806 as our total for current liabilities. So in other words, we are saying the representation is shown in line with our current liabilities description. So we add again. So we are saying capital 95,437 plus 8,000 plus our current liabilities 8,806. Then we get the total, which is going to represent the second balancing figure. We come here, we just saw by a line, and then we put it here is our 112,243. So this figure, we write the description here, is total of what? Of equity and liabilities. Total of our equity is capital. So we are saying total equity and liabilities. And it represents the second balancing figure. So this is the second balancing figure, which should be the same with the figure that we have for total assets. So this is the accounting question that has been described by this balance sheet by saying total assets is equal to total of equity plus liabilities. So this is what we have, guys, according to this video. Hopefully this video was helpful. Let's stay tuned for more videos to come. Let's subscribe and share. Let's share the link so that you get notified as we post new videos as we prepare for new exams. As for this video, I'm out. We'll meet again in the next video.